Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, July 29, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we've got a lot of stuff on the docket today and this week. So what we'll do is a quick review of where we've been, what the likelihood is from a big picture perspective of what's going on, where we are in the charts, and what the expectations are over the next few days. Last week, the market came in to run a test. They came within pennies of the trend line that we've been watching for quite some time. This is the long-term trend line that connects the 2007 highs to the 2022 highs and so on. And that's the trend line that you see here from a daily chart perspective. They came into with a stone's throw of it last week, bounced right back over the 50-day moving average. We know that markets love to come back and check in at or run a test of an important or most recent breakout area. That trend line qualifies as a breakout area. How so? Because they broke above the trend line and now they've come back to test the trend line. Funny how that works. What are these three blue lines down here? This is in the event that we get another wave of selling. These are three numbers where the market could use any of them to bounce the tape. We went over exactly what these were last week. We'll cover the first one right here, which is this high here, which is another breakout area. So the market ran up to this place and then it decided to pull back. So Mrs. Market thinks that that place, she knows that that particular place where she stopped at the high is important and therefore classified as a breakout area when she comes back to break out above it, which happened over here in early June. Ate some time off the clock, broke out above it, came back first to the trend line, the next stop down below the trend line. Here's where you want to get out your sticky notes. The next spot down below the trend line is another breakout area, happens to be 533.07. Write that down, put it on a sticky note, and check this out. We're looking at 3M earnings deliver strong second quarter earning results, updated full year guidance. They had blockbuster earnings. Why? Because they sold an excess amount of sticky notes. Now, where do we go from here? Well, here's the situation. This week is Kabuki Theater. It's the FOMC two-day meeting, interest rate announcement culminating Wednesday afternoon. They meet Tuesday and Wednesday. So first of all, a lot of the trading stuff, other than the morning rush hour, if you will be, quote unquote, and these are air quotes, waiting on the Fed. After the FOMC interest rate announcement on Wednesday, Jerry Powell will give his presser, and certainly the market can have some volatility around the FOMC and Jerry's presser. Doesn't happen 100% of the time, but it happens a lot of the time. It's what we have to look forward to midweek. Volatility is a trader's best friend. It creates opportunity. Can we have a rug pull around the Fed FOMC interest rate announcement? By the way, what's the market looking for? What are traders looking for? The media, the pundits, the talking heads, what are they focused on? I should say, what are they fixated on? They're fixated on how many interest rate cuts do we get in 2024? Do we get 2 or do we get 3? Severely disappointed would be if they didn't get 2 or they didn't get any, by the way. The market is looking for the crack/sugar high. Money printing equals asset values increase. Easy money increases, pump them up. A tight money supply, or a tight money policy, if you will, is asset deflation, stock price deflation. Traditionally, this is over a long period of time, albeit this time we've seen assets increase. We've seen housing increase. We've seen stock prices increase as the Fed was increasing interest rates. But the market is definitely looking for easy money. What if they don't get it? Look out below. Rug pull event. Now, they're not necessarily, at least I don't believe they're looking for an interest rate cut in this month, meaning August. However, I do believe the pundits and everybody else are looking for some hint or at least confirmation that they're going to cut in September. And I think that's on the docket this week. Traders, investors, pundits, talking heads, all those people are looking for language to support a September interest rate cut. At least that's what I think from where I sit. Let's narrow things down and talk markets for a second, talk specifically the S&P and what she has to do for the bull case and what happens if it doesn't happen and what is the bear case, all that stuff. So let's look north first. The bull case, first order of business, is getting above this breakdown candle high. This is the candle from the 24th. The high is 549.17, and that's the high that if she gets above, she will be in no man's land, working her way up, not necessarily in one bite, but working her way up to a gap that exists all the way at 553.78. Overhead resistance and a gateway to where? A gateway to fill the gap. 553.78. And that's the bull case. Nothing happens if she can't get above this breakdown candle high. Again, the number is 549.17. Nothing happens until or unless. Can this be just a little bit of a bounce in a downtrend, a wedge formation, dead cat bounce? Absolutely. How do we know that these lower numbers are on the table? Well, you won't know unless she cracks last week's low and gets below this trend line. But that's how we'll know. So there's the near term, both sides of the tape. Looking out a little longer, we're going to expect enhanced volatility between now and the election. Markets will go up, but markets will go back down. There will be two-way trading between now and the election. One day, it's going to be Harris. The next day, it's going to be Trump. The next day, it's going to be Harris. Then it's going to be Trump. They're going to be neck and neck for weeks and months. That's just the way it's going to be. Regardless of what the polls say, you're going to find them neck and neck leading up to the election. Neither side believes the other side's polls. That's just the way it works. Neither side should take anything for granted. What happened inside the numbers today? Did anybody inside the numbers live room make money today? That's the main question. Post a comment under the video. Help a brother out. I'm not the brother. Other traders are the brother. People are looking for help. They're looking for a place to get help. They're looking for answers. There's a lot of information out there. It's very confusing to the unassuming person that doesn't know what can be provided, what is provided here on a regular basis. Help a brother out. Post a comment under the video if today was a successful day for you inside the numbers and the live room. Today, early going, 0 dark 30, we come out with an early pivot, 545.60. 5-minute chart, right of the vertical is today's activity, and you can see the pivot running through 545.60. Now, there was a trade in the morning centered around the pivot. It's one of our favorite trades of the day. It's one of our favorite morning trades, I should say. We have a small bucket full of morning trades. This is one of them, coming back to run a test of the pivot. What's below the pivot? What's going on around the pivot? Do we expect them to bounce? Can we get a decent trade out of it? That was today's trade, and the answer was yes. Above the pivot, on candle closes, opens the door for the next leg higher toward 547, give or take. This is at 0 dark 30. Can you say target? Can you say overhead resistance? So let's see what we have as the day starts to get underway. What's the early scoop? 547 is important and a gateway to the next leg higher. The market was rallying in the pre-market. Essentially, in a nutshell, what they did was they came back to run a test of the pivot after they opened, and that was the support a little bit lower. Let's keep going here as the day starts to get underway. So the thieves in the morning ran a test of 547. That's okay. Doesn't mean the trade's off the table. we have 545.60 as the pivot. Below, the door opened for 544.75 down to the flat line of 544.40. All this stuff is a long drawn-out way to call 545.60 down to 544.75, give or take, a zone of support for a bounce back in the other direction. 545.60 to 544.75, a zone for a bounce back. And there you have it. So the market opens, there's the first 5-minute candle. Market opens a day at 546.02. Comes right down to the pivot, busts through it, goes right to the second number, right back above the pivot, and to where? 547. If above the pivot on candle closes, the target is 547. Do you think, just by watching this and seeing what was written on the board, do you think anybody made money with this information today? I'll let you answer that question for yourself, and we'll see what kind of comments come under the video. But I know the live trading room had a little bit of a bonanza this morning. Pause the video, read the notes, go back to the chart, and double check the work. 931 in the zone right out of the gate. Below the gap, which is 544.40, and she can leak lower. Just giving information to traders that they need if, in fact, something that we don't think is going to happen starts to happen. You got to have all the information. You got to have your numbers. 545.60 is the pivot. And there's your bounce from within the zone. Traders long from within take profit and hold a trailer. Above the pivot, she's bullish. 547 becomes the target by staying above the pivot. What happened? She stayed above the pivot, and 547 became the target. What was the high over here? The high was exactly 547.04, 547.04. How you doing? By 9:45, it's official. Nice trade. The rest is trader's choice. Next target is 547, give or take. Meaning, once we have a base hit in our pocket and she starts to rise, and most traders have taken another profit in their pocket, more than the base hit, it becomes trader's choice. How much of it do you want to hold? How long do you want to hold it? Everybody's different. Pause the video, read the notes, go back to the chart, and double check the work. There's one more I want to show you. Remember, pause them, read them, go back to the chart, and double check the work. We had another trade come up later in the morning. Here at 11:02, you see here we've got 543.45 down to Friday's low is support for a bounce back scalp with potential situation. 543.45. And there it is again. Now you got some kind of a smiley face going. 543.45. That was a bounce back in the other direction. We wait for the things that have the highest probability that I could find where I believe we're going to get either a reaction back down or a bounce back up, reducing our risk, reducing our variable risk, knowing that a lot of traders are taking these trades. I want it to be right. Pause the video, read the notes, go back to the chart, and double check the work. Here's stocks on the move today. We only had 2 on the board. We were getting a gap higher open in the morning, at least early on. Most of the stocks were not doing much in the pre-market. That's typical for a Monday. Expect things to pick up tomorrow and beyond. So Exact Science and Abbott Labs didn't hit their entry objectives. Therefore, they're off the table. Now, what's going on over in Camp IWM? As most everybody knows, this is my favorite market leading indicator. S&P finished about flat today. SPX was up 4 points. SPY was up 30 cents, 32 cents. IWM was down 1%, or about $2.50. What's up with that? Is it a canary-ish type of thing? We don't know yet. What we do know is we have a weekly tail candle. And the weekly tail candle doesn't get negated, meaning this is a short trade by the book as long as they hold the weekly tail candle from 2 weeks ago. Close a week above that tail candle, and that short opportunity is off the table. Now, they've come back twice now, and here's an hourly chart. Maybe you can make a case 3 times or so to test this area. So is this bullish, eating time off the clock to run higher above that tail candle, or is that tail candle holding and they're going to eventually fall? Well, let's go down to today's activity. Today, in a flat tape, a flat to up-ish tape, the IWM favorite market leading indicator was down about 1%. You have to have that as a puzzle piece. It has to be on the table. It's important information. You did not have tremendous volume today in the down day in the IWM, but it was a down day nonetheless, and price is the absolute arbiter. What about my second favorite market leading indicator, the folks down at the transportation department, Buttigieg's crew? Is he in the running for VP? I don't think so. I think it's just in name only. I don't think she's really considering him, do you? Seems like kind of a weenie. That's a technical term. What we do know about the transports is they're still hanging around the top end of this trend line. What is this? For a refresher, we have a triangle situation. They tried to break out. They couldn't close the week above. They came back in. Any weekly close above this trend line or below this trend line down here is an important development. That will be a breakdown or a break up or break out if they do that. They're working on it. They're working on the top end. I suspect a lot's going to hinge on the discussion and the melee around the FOMC Kabuki Theater this week. That's fine. Let them inject some volatility in the market, and we'll take advantage where we can. Speaking of which, another exit today for the lazy swing trader automagical Algo system. Had a long entry at an average cost. There were two entries, an average cost of $43.42, Bristol Myers, and today's second exit. It was already a risk-free, emotionless trade. Second exit, 17% from average entry, was 51.10. Interesting candle today. The high today was 51.19. You have to ask yourself, how do you do that? The entries are supposed to be, not every single time, but the objective is to be as precise as the exits alike. With the lazy swing trader automagical algo system, you get a watch list so you know what's coming. Then when it arrives, you get the alert of what you already knew what's coming. So you have a list of stocks that are on the open trade list. So you know already because they're posted what the exit target is, what the stop is. And then, oh, by the way, you get an alert when it hits the exit target. That's the way it works. So this was a great example of an exit target for Bristol Myers. It is totally a free ride. We've got two exits. There's one more on the board, but we'll take 17% from entry on second exit. Fantastic. Almost forgot we had some traders in the live room trade this. Don't forget we trade stocks, we trade commodities, we trade whatever it is, S&P, NASDAQ, IWM, live room. There's no rules, there's no boundaries. Well, there are some rules, but there's no boundaries in what we're willing to trade. So today, Clean Spark came up and we took a bounce off. Some of us took a bounce. Some traders in there took a bounce off 1635. They right away got to a high of 1666. That's about 2% on an intraday scalp with potential quickly. That's pretty darn good. The numbers work. What's going on in Q people land? This is just a dead cat bounce from last Thursday's low. That's it right now. Very similar to the spiders, but a weaker bounce nonetheless. Same rules apply in Q land. They've got to get above this breakdown candle high in order to make anything happen on the bull side. If this is just a wedge for another day or two, think in terms of FOMC, maybe Wednesday, Thursday, all of a sudden, this is either trading up here at that time or they're poised to have another leg down. Chances are the move happens based on the activity around Kabuki Theater this week. XLF down 6 cents today. We're not going to make a federal case out of that. This is bullish. Above all the moving averages, trend is your friend. A little bit extended on the weekly chart. You got a tail here. You can look at this the same way as you do Camp IWM. Above this tail is bullish. This tail holds, and she can go lower. It's a close above this tail. That's technically how this can be traded if one wanted to trade this particular chart or any chart that looked like this chart pattern on a weekly time frame. If anybody wanted to trade it on the short side, it's against the tail from 2 weeks ago. The high is 44.11. Any weekly, write that down, weekly close above that high, that's the bull case, can't be short. Technical stuff 101. What about the Philadelphia Semiconductor Index, the smash mouth as we like to call it? Again, similar to the Qs, not really having a meaty bounce. This is more of a dead cat-ish bounce. Today was down $1.71, 0.7%. Canary in the coal mine. Money's running out of tech. Is money rotating or is money running out of everything? $100,000, $64,000 question. I think a lot of that will be answered this week around the kabuki FOMC interest rate announcement and projections that they have. Now, again, last comment on the Fed is, not sure why everybody hangs every last word they say, why we're so interested in what the Fed's going to do based on the data that they're looking at, because they're wrong most of the time. Remember, inflation will be transitory. They were wrong about that. I could cite 58,000 other things in the past they've been wrong about. So why are we listening now? It's a great question. If you have that answer, post it under the video. I want to know what you think. What's their track record and should we follow them? Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.